Yeah, thank you. So actually, we are quite sector agnostic, and our investment thesis is built around three pillars. First of all, we want to invest in like infrastructure layer, where other businesses need to build upon, and that should serve as a platform where all the transactions and other upper layers are built upon. And second layer is like B2B. In Africa, consumer spending power is still low, and we need to empower the businesses first, and then business owners as individual also have more spending power as consumers. So we have to empower from the business side. So our second thesis is around B2B. And then third layer is to focus more on new work style and new lifestyle enabled by penetration of internet and mobile phones. So it includes like maybe creative space or gig worker or whatever. So I think by adding these three pillars, we have kind of social infrastructure layer, business layer, and individual layer to include all the evolution happening in Africa and cover all the aspects. But these three are not like standalone. We need all these three to be built together. So that's where we try to focus on. And I think in the next 5 years, we are seeing more and more consolidation by the champions in each sector. So we try to always support our portfolio companies to become a Pan-African champion so that they could be on the side of consolidating rather than being consolidated. And that's how we are backing our portfolio companies. So I don't think startups can actually replace physical infrastructure, but startups can actually facilitate better way of using resources and also to make the operation more efficient and also make the whole entire supply chain, value chain to be connected in a better way and reduce the loss or reduce the inefficiency. So I think based on my previous experience working on infrastructure and energy projects, actually I have a very deep understanding in this space. So I think, for example, like we have invested in a company called BPS, which is helping power distribution companies to operate more efficiently and use their money in the better way rather than wasting their money by focusing on, small parts to be fixed. They should always focus on the biggest bottleneck in the power distribution. And because I have that kind of expertise and knowledge, I'm one of the earliest investors in BPS, and now they're expanding from Nigeria to Ghana and to Zambia. So yeah, definitely my previous experience is very helpful. And also maybe another company we are backing is called Green Flare, which is using flare gas in Nigeria and use that gas to generate power and use that generate power to work on AI data center and Bitcoin mining. So this is also a perfect example of how I can combine my infrastructure experience with startups. And I think this kind of business model is quite interesting because their final output is not power to be used in Nigeria. It's more to use power for AI data center and Bitcoin mining. And also by reducing flare gas, they get carbon credits. So their revenue is not Naira based. Their revenue is based in actually Bitcoin and US dollars. So I think this is also a great business model where we can combine the infrastructure, waste of energy in Nigeria, and very, critical infrastructure where AI is going to dominate everything. So we need that infrastructure layer as an AI data center, as we have seen in other parts of the world. This is really creating lots of impact in the competition for who will dominate AI and who will, make the most money from the AI supply chain, value chain. So, yeah. So I think I have two angles. First of all, Japanese companies are losing competition in Africa to Chinese or Korean or Indian manufacturers. And if you look at Chinese or Indian, they are very good at packaging their products and localize it to African use cases. If you look at Chinese smartphone, it's not just the hardware. They already have pre-installed different apps, including like fintech or music streaming, and like Transsion, who has biggest share for the smartphone. They now also do like logistics in Africa. So they are very good at creating this package of the Chinese competitive offerings, right? And in the case of Japanese companies, they are very bad at doing this. Their product is expensive, but the quality is high. But the next question is, how do they make it more locally affordable and also adaptable to local use cases? And I think in that context, Japanese companies really want to outsource innovation from African entrepreneurs, how to add on financing to sell to the consumers in Africa, for example, how to do the most efficient digital marketing in Africa, or how to, use the payment infrastructure where people maybe rely on mix of cash, bank account, and in other countries, maybe mobile money. Japanese companies have no idea how to adapt these solutions, local solutions. And that's why they're interested in investing in African startups and outsource innovation and make the Japanese products more productive and competitive in African markets. So that's how we are actually connecting these Japanese companies as our LPs and help them to collaborate more with local startups, and potentially they acquire local startups. That's one angle. Second angle is that I think Japanese startup ecosystem is quite isolated from other parts of the world because it's very Japanese dominant in terms of language, and Japanese population is still big enough for the Japanese startups to survive just in the Japanese local market, which is prohibiting them to become more global and also access global financing. I think there's a kind of analogy to African startups because African startups are actually struggling to access global capital. And also they not just need to become Pan-African, but they need to become more global. So in that sense, I think we can draw a lot of lesson from the Japanese ecosystem, how to connect them with the global capital, as we do in Africa as a Japanese investor, connecting the African startups with Japanese capital to start with. But we also want to expand this network to more broader Asian investors. And I think this is actually the same thing the Japanese VCs are saying about Japan. We need to globalize. We need to connect the market with the global capital. So I think there's lots of analogy and we can actually learn from each other. So I think, scaling is very important because as maybe Nigerian startup, having $100 million GMV is already, quite big. And maybe this startup can fundraise for Series A round with this $100 million GMV. But the irony is that for the big Japanese corporates, $100 million GMV is still small. Just imagine maybe pharmaceutical market in Nigeria is $4 billion market. And if you are serving B2B marketplace for pharmacies with $100 million GMV, your market share is still like 2.5% of the entire market. If the Japanese companies want to sell their products in Nigerian market, is this platform with 2.5% market share big enough? No. So I think my strategy going forward is that our VC is actually a joint venture between Japanese Verod-Kepple and Verod-Capital from Nigeria, the PE fund. If we combine PE assets Verod-Capital have the pharmacy chain, and we have maybe B2B marketplace for pharmacy, and we have fintech company that can provide payment platform for pharmacies. Then we have the bigger market share. By adding them up, it becomes like 20% market share cluster for the Japanese companies to use it as an entry point into Nigerian market. So for me, it's always important to not just sell startup business model as on standalone basis, but rather we always think about how we can scale them by integrating them into existing industry base in Nigeria and offer it as a full package of the opportunity to the Japanese companies, Japanese investors. So I think the role of VC is really connecting trust. As a VC, I maybe trust this founder, this startup. I want to invest money into this company. And behind me, there are many Japanese strategic investors. But these Japanese companies are not really, investing their money because they're excited by this founder or the startup as I did. They trust me, so they put money in our fund. I put our fund money into this company. And we maybe spend 2-3 years to educate our Japanese strategic investors to understand why this company is so great. Then there's a chance that they will also invest into this company. So AVCA is the venue where we will expand the trust. We connect the trust. And so we need this kind of place to network and share our insights and share our portfolio companies, investment thesis. Then this, trust will expand and you would have bigger, diversified investors to support the ecosystem. So I think that's the value of the AVCA.